Hi, I'm Anne Gaviola. Welcome to the Peak on Global, where we break down what is trending in the business world and what you need to know to stay ahead of the curve. Joining me now is Brett Chang from the Peak Podcast. Welcome, Brett.
Great to be with you as always, Anne.
Brett, where should we start with this FTX saga? It is the gift that keeps on giving in so many ways. So the new CEO, John Ray III, who was previously tasked with winding up Enron, called what he saw at FTX a complete, and I'm quoting here, a complete failure of corporate control that made that whole Enron fiasco look tame in comparison. Wow, Brett, thoughts?
Well, John Ray III is not just any takeover expert. He is the best in the world at restructuring, and you can see that just in his resume. He did Enron, he did Nortel, and yes, and you are correct that in the bankruptcy proceedings, which came out just a few days ago, he said that FTX was the most mismanaged organization that he ever saw. And this is considering that while Nortel was not necessarily illegal, just a kind of poorly run business by the end, Enron was an illegal entity, and he would say that FTX was worse than Enron. So it's a pretty big statement.
Yeah, I'd say it's a pretty low bar. Now, things that we've learned, and I've been going through all of this and just on the edge of my seat. So going through the U.S. bankruptcy court documents, they paint a picture of how things were at FTX pre-disaster. No board meetings for this multi-billion-dollar company, expenses submitted and approved via chat with an emoji, no tracking of customer funds. It sounds unreal. It sounds like a movie, and this was real life.
Well, and you mentioned no board meetings. I think it's important to mention there was no board. There was no board to meet. Yeah. And so I think there was just a massive oversight by the investors that fed hundreds of millions of dollars into this company and effectively gave it a stamp of approval so that then customers felt comfortable putting their own dollars into it as well. And nobody really knew what was going on until it all kind of fell apart. But there were some signs. There were some interesting things happening behind the scenes. For example, what really kind of took down FTX was not FTX itself. It was that FTX was loaning money to a market maker, a separate company that was also owned by Sam Bankman-Fried called Alameda Research. Now, what's interesting is that was a black box. We never really knew or understood what the relationship was. It was out in the open. Investors should have known. Investors should have done their due diligence. In the end, they've lost their money, but like many of them have said, that was only a tiny portion of their portfolios. The real losers are Main Street, normal investors like you and I, Ann, that put their money into FTX, trusting Sam Bankman-Fried, his vision, and the many investors that backed him, and now they're probably going to lose the most.
I would say, as a word of caution for retail investors, don't keep your funds, your digital assets on any exchange, no matter how reputable, no matter how dominant it is in this world of cryptocurrency. Now, as you mentioned, there were a lot of big names that got on board with FTX. It lent it a lot of what seemed like credibility, from Tom Brady and Giselle to Steph Curry, Shaquille O'Neal. I could go on and on. They're named in a class action lawsuit, among others, accused of using deceptive means to entice customers to invest in the company. I have to say, I'm kind of glad to see this kind of litigation happening because they played a part in this entire three-ring circus. Yes, there were a lot of parties that, contributed to all of this, but the celeb part of it is the part that Main Street really, knows about in so many ways, from the Super Bowl ads and the rest of it. And these are people who have the means to do really thorough due diligence. They should have a responsibility to the public when it comes to using their massive influence for something that is so risky.
Well, we've seen this time and time again, and that not just celebrities, but investors, but all types of folks get swept up in the mania around this type of stuff. And I think cryptocurrency was a great example of that. You mentioned a bunch of big names there, what was also worth mentioning is that the American Airlines Arena, where the Miami Heat play, is now called the FTX Arena, that every single umpire in Major League Baseball has FTX on their jerseys. This was all intended to do one thing, and that was to give credibility to the exchange, to give retail customers comfort that their money would be safe. And there has to be a better way moving forward when this type of mania happens around some type of investment asset, that more diligence is done. And I hope that there will be a lesson that's learned from this for all brands, not just celebrities, but sports teams and any type of brands that are doing business with these types of entities, that they will look a bit closer. But, and it's really tough to say. Yeah, again, it's hard. If you're Tom Brady and you're sitting there and you're looking at some of the biggest names in the investment world, people who really should know better, people who really are experts at doing this type of due diligence, when they're giving Sam Bankman-Fried and FTX hundreds of millions of dollars of capital, that implicitly gives you then permission to go do this. And so I think it was just a ladder of irresponsibility, and celebrities are just one rung of that.
Yeah, so there was Hollywood saying, oh, this other person has probably done the math and looked under the hood and everything seems fine. Silicon Valley also responsible here in so many ways. I think one of the lessons, I'm going to be a little bit cheeky, is if someone is featured on the cover of Forbes, it is time to walk away or maybe even short the company. This is a joke. This is in no way financial advice. Let's switch gears a little bit, though we could go on and on about FTX. Our second topic is about third quarter earnings from two of Canada's largest grocery giants, so Loblaw and Metro. What's your big takeaway from what we saw there, Brett?
Well, the interesting thing what's happening right now is food prices, as everyone knows and sees on their bills. I think what we're seeing on a macro trend is that food may be going into a deflationary period. We're starting to see the supply chain shocks that we saw in early 2020 and beyond now start to calm down. The price of shipping goods from China to Canada is lower than it's been since 2020. And so I think we're in a good place on that. The grocers are obviously doing very well. They're reporting record earnings, and that's been partially pushed by the inflationary food prices that we've been seeing over the past year. But it'll be interesting to see what happens in the next quarter and the next year as food prices begin to stabilize.
Yeah, I think it's interesting. A lot of people were looking at their balance sheets and trying to figure out what are their margins, their gross margins, when it comes to food items. That was difficult to do. We had to take the representatives from these giant businesses at their word when they say that they've remained pretty steady, and in the case of Metro, even gone down a little bit. But it is tough to separate out the two because what they do is they lump in those numbers for food sales and all the other stuff as well. So, was it a result of people spending more for things like cosmetics, as Loblaw was saying, at a lot of their stores because people were returning to work? And is that what helped bump up their profit? Or is there something else at play? And there are investigations underway to take a look into all of this, but I couldn't figure it out just from their earnings.
This is a challenge with standard accounting practices in that they have to report what their total earnings are. They don't have an obligation to investors to actually break down which of those categories are performing best. They can provide some guidance on that if they choose to, but that's not a legal requirement. And it is really the responsibility now of parliamentary committees and the government and regulators to look deeper into that if they think that there is concern. It's an interesting point that you raise, Anne, which is these grocers in particular provide daily services that millions, that all of us rely on. And perhaps there should be higher requirements to them in terms of what they're reporting to ensure that we, the customer, that we aren't getting screwed, to be honest with you, and that we're paying a fair price for the goods that we need to live.
Yeah, is this a separate category? Because, I mean, there are ways to kind of cut back in terms of what you spend at the grocery store, but you can't forego it altogether, at least not in a way that I figured it out. And you know that there's been news this week. We see inflation continues to soar, even though it's not going up quite as quickly as it was before. And I feel this every time I go to the grocery store, even when I go out to eat, though it is important. I'm still trying to support local, though, because winter is coming. And the restaurant industry, no stranger to food inflation and trying to figure out, how best to pass it on to the customer. It's been dealt hard knock after hard knock during this pandemic.
Yeah, and food prices really are one of the core indicators that central banks look at when determining what interest rates should be. So the fact that we're starting to see a deflationary period for food prices, you look at salmon, for example, that has gone down 50% since its highs recently, that is a good indicator that perhaps central banks now will begin to slow down their pace of increasing the interest rates. And that should hopefully help the economy at large and be a good sign for everyone. But we'll really have to keep a look. It's tough to say. There's a lot of moving pieces, as we always talk about. And this is what some people are calling a polycrisis, which is there are just many different components to it. And it's really tough to track or predict what's going to happen.
Yeah, it feels like we've been in polycrisis mode for some time. Money markets predicting a smaller interest rate hike from the Bank of Canada. Its next opportunity in December, so 25 basis points. And I do think that there is more to be done in terms of looking at the impact of a monopoly, a duopoly, an oligopoly when it comes to prices and price gouging, as we've seen in the case of Ticketmaster and those Taylor Swift concerts. But that's a whole other ball of yarn. We've got to leave it there for now. Thank you so much, as always, for your time and your insight, Brett.
Thanks, Anne. Great speaking with you, and have a good rest of the week.
You bet. And you can get all your daily business news with the Peak Daily podcast. It is available for free on Apple Podcasts, Spotify, and wherever you find your favorite podcasts.